Hello and welcome to Smaulgld's. In case you missed it, top gold and silver stories for the week ended April 22nd, 2017. India launches cashless zones and Trump sets up inflation zones USA. India's Prime Minister launches cashless and less cash townships. Trump signs Buy America, High American executive order and warns on NAFTA. Could this be a harbinger of higher inflation? U.S. Mint gold sales are non-existent, while Russian, Shanghai Gold Exchange, Indian imports, and U.S. gold ETF volumes are soaring. We're going to get into that. And J.P. Morgan's COMEX silver warehouse holdings top 100 million ounces. We've got a lot of charts to go through today, so if you're in front of a computer, it might make sense to open up a browser, go to smaulgld.com, and you can follow along probably better with on the website. But if you do not have a browser, I should be able to explain what you're looking at sufficient enough, but it is better if you can follow along on the website. There's your pitch for donations. I do appreciate those via PayPal, via Bitcoin, or become a patron. I now have 2 Patreons. At this pace, I might get more. No predictions there, but thank you very much for my second Patreon of the Smaulgld website. So top stories. Trump signs executive order to promote American workers and products as the dollar weakens. Now, if you have a weaker dollar, that by definition means that imports are going to be more expensive. And as you know, the United States imports a lot of stuff, especially from China, and it's cheap. It's all through Walmart and everywhere else. Well, with a weaker dollar, that means that prices are going to be more expensive. And the concept here is Trump wants to flip everything on its head and make the United States an industrial exporter and then cut down on imports. So part and parcel of that is he also wants to slap tariffs on imported duties. Well, with a weaker dollar and tariffs, let's say 20%, by definition, prices are going to be more expensive for imports. No problem, you say. We're going to make the stuff ourselves. Well, okay. Under the executive order, the United States will make the products, they'll pay the U.S. workers higher prices, and they'll charge higher prices. So put that all together, and that is a recipe for inflation. Because while you're making the transition, the United States is not going to have the industrial capacity to make up for the goods that need to be imported. So therefore, those goods will remain expensive. They'll have a tariff on them. There'll be a weaker dollar. And then eventually, when the United States starts making them, they're going to be more expensive because workers in America get paid more. And the prices are going to be higher on the goods that the U.S. produces. So the concept of Trumpflation, they were calling that a good thing because we were going to get tax cuts. We were going to get lower health care costs. We were going to get infrastructure spending. Well, we may get Trumpflation, but it won't be might not be because of those things. It may be because of this America First executive order. Now, one thing about inflation is eventually it goes away. But that doesn't mean it's not harmful when it's around. So if the America First initiative is successful, eventually the United States, if it works, would be self-sufficient and everything would just be fine. The U.S. would flip everything over to an export company. Easier said than export country. Easier said than done, but just in the short to medium term, this is probably going to cause price inflation. Now, the executive order, I think he's got 120 days to kind of initiate all these orders. So you would probably start to see inflation in about a year, price inflation, a little less than a year. Now, we'll see. Everyone can predict inflation. It doesn't always come. But this seems, if the order actually goes through, you would get the type of price inflation because on its face, it is inflationary. Now, gold and silver sales at the U.S. Mint. We might as well touch on those now. We'll look at the numbers, but there's really nothing to look at. U.S. Mint has sold 2,500 American Gold Eagle 1-ounce coins. That's it in April, and there's only another week left. 2,500 ounces. That's absolutely nothing. And silver, I think they sold 600,000 so far. So we're looking at some of the worst months in over 10 years coming up if they continue at this pace. But demand for gold that we know of is soaring elsewhere. And we've got some charts I'm going to show you, and we covered it during the week. We had Russia's still adding. The Central Bank of Russia added 800,000 ounces of gold to her reserves in March. Gold ETFs, will show you a chart on that. They're going higher. Indian gold imports have picked up officially in February. Unofficially, the numbers look really strong for March. So gold, and also in England, apparently gold sales are up on this snap election that was called by the Prime Minister. So it seems odd. Now, maybe the U.S. Mint numbers are incorrect, but I don't know. But the U.S. Mint numbers are very low. And maybe it's because we had a poll on this, and most people thought that the reason that retail buying in the U.S. was down, not most people, but a plurality, about 40% thought that people are just tired of the silver's going to skyrocket mantra for 5 years. It just hasn't. Others said they've tapped out, they don't have any more money, they're not buying. I think also some people have switched over to digital forms of gold, like ETFs. That's a possibility. Some people suggest that Donald Trump is the reason that many gold bugs have faith in Donald Trump, and therefore they don't have the same prepper mentality. I don't know if that's true, and therefore they're not buying as much gold and silver. But we'll see. That could all change on a dime. We have Marine Le Pen's election. As well, I'm recording this on Sunday morning, so we'll know later today where she turns out. But again, even if she wins today, that'll probably be a short-lived jolt to the markets, because then you'd have to see what the polls show if she wins or comes in second, what her chances are in the runoff election. So I don't expect this to be a lasting bump unless it just shows she's got this tremendous momentum and she's going to win, or if she just wins outright today, but I don't think that's going to happen. All right, so gold and silver. Gold basically flat during the week. Silver closed down 3.3%. And the gold-silver ratio is now above 70 to 1. And I saw Big Swear was talking about all the reasons why silver is better than gold. Some valid points. You can look at silver and say, in this respect, silver is better. But there's many reasons. I'm not going to get into them right now. That gold is better than silver. One of the reasons he gave, however, was that silver is harder to manipulate because the banks don't have gold. Well, not having gold, first of all, the central bank's owning gold puts a floor on the price of gold because it creates demand that doesn't exist for silver, because central banks don't own silver. But another point is silver is a much smaller market. You can buy the annual silver mining production for $13-15 billion if you weren't actually chasing the market higher because you were in it trying to corner it. But if you could just write one check and get the entire silver mining production, it's only $15 billion. So because it's a smaller market, it's much easier to manipulate. You can smack down silver with, a certain number of naked shorts on the COMEX a lot easier than you can with gold, because the gold ones are 70 times more expensive. So I'm not weighing in whether the gold-silver ratio is going to go higher, is going to go lower. One thing I could say for sure, there's no certainty that the gold-silver ratio has to go down to 10 to 1, 1 to 1. I mean, generally what I would say is that if gold rises for a significant period of time at a significant level, silver goes higher than gold on a percentage basis. And when gold goes lower for a long period of time, silver does the same. Silver goes even lower than gold does. So that's been historically the case, is that silver is more speculative, it's smaller, it rises faster in a bull market and falls faster in a bear market. But I do not think it's proper to say that it's guaranteed, because I only have a 1 month chart, but I can show you charts. If you go to the gold-silver ratio link on the Smaulgld site, I keep the charts for the last 10 years. And the last 5, it's just gone higher and higher. It hit 80 some odd to 1. So, maybe one day silver will shine, so to speak. But silver has not been at that ratio, at a 16 to 1 ratio for decades. Even in 2011, when silver hit $50 an ounce, it was only 35 to 1, 30 to 1, something like that. So I wouldn't put too much stock in, or definitely not go all in silver versus gold. I think what he was saying was sell all your gold and buy silver. Okay, I don't give investment advice, but I also think that any investment advice that's all in is probably not good investment advice. It's good to point out the positives and negatives, but to conclude, therefore, that it's a slam dunk. I think no investment advice would ever say anything is a slam dunk, because nothing is a slam dunk. All right, now let's get to some of the things that happened during the week. Now, there was a Georgia special election, and this supposedly was going to be a referendum that Trumpism is over, and the media was saying that if this guy Ossoff, the Democrat, wins the 50%, there's not a runoff. That means that Trump is finished. People are fed up with him and so on. Well, he didn't win. And basically, it's in a district where, even though it was Georgia, for whatever reason, this is an area that Romney won big, Bush won big, but Trump didn't win this particular 6th district in Georgia very big. In fact, Hillary Clinton, of the 3 counties in the district, won one of them and lost 2 of them. And this guy, Ossoff, basically performed almost identical to what Hillary Clinton did. 1.2 difference percent in Cobb County, 1.4% difference in DeKalb County, 1.6% difference. What I take away from this is not that Trumpism is over. It's just that this guy Ossoff is probably a little more popular than Hillary Clinton, but not popular enough to beat a Republican. So that was a non-story. They wanted to make that into a big story. Now, let's talk about J.P. Morgan and silver. James Henry Anderson over at TF Metals has taken, not at TF Metals, at TF Metals is Craig Hemke, at JM Bullion, has taken to now publishing the J.P. Morgan Chase silver holdings in the COMEX vault that they have. And he said he wasn't intending to do it every day, but it just keeps going up and up and up. And one of the things that I noticed in this tweet here is that even though it's been going up and up and up, I have some charts that go back. So this one I think is, we'll see what this one looks like. Now they're at the JP Morgan is over 100 million ounces of silver in its COMEX vault, when it basically had none when it opened it in 2011. The number of registered, so let's look at this here. So there were 5 million registered shares. So you just don't know, registered shares means that they meet all the COMEX requirements to be listed in the COMEX warehouse as available to trade, and they're registered and ready to go. Eligible means they're in the form ready to go. They meet the requirements of purity and the size and so on, but they're not available for sale right now. They're not been registered to sale. Now, this is a chart from July 2016, when they only had 69 million ounces, but they had 5.1 million ounces registered. Then if you go along now to a more recent chart here, this is April 10th, they are up to 91 million ounces on April 10th, and they still had only 5.122 million registered. Now, let's go down to just a few more days later, April 20th. They're at 103. Look at that, 103 million ounces of silver, but 5.122 million registered shares. So this indicates to me that they are adding this, and it's not intended for sale. Now, is it JP Morgan silver? Could be. I mean, why would JP Morgan's depository, COMEX depository, increase at this rate when the others are not increasing? And then why wouldn't they, if they're just clients prefer to trade with JP Morgan, it's possible, but not at this straight line up. And then why, if they like to trade with JP Morgan, why wouldn't they just register them and have them available for trade? So this is strong circumstantial evidence that this silver, the bulk of it, is JP Morgan silver, and they're not registering it because they don't intend to sell it. Now, they can sell it. It doesn't take much to get it registered, but they have not registered it over, it looks like this 5.122 million has been for about a year, and they've added like 40 million ounces since last year. You can see from here, from boom, look at that, from 450, 60 million all the way up to 100 plus. All right, what else did we have on Twitter? Okay, so this one for all of you economic fans here. So Mayor Billy de Blasio, he's the mayor of New York. He decided he's going to tax cigarettes. They're going to stamp this scourge out. I mean, remember Bloomberg was the mayor of New York. He was going to get rid of the big gulp. So they figure they're just going to put these punitive taxes on people, and then the world will be a safer, better place because people won't do these nasty things and the government will have more money. I mean, pretty obvious what happens when you add a tax to cigarettes. They just get smuggled. Remember that guy that got strangled to death because he was selling cigarettes on the street? That's just what happens. I mean, you get you get these incentives for the black market. People are smoking. It's not illegal. And so you get people willing to take the risk to bring cigarettes in from other jurisdictions. And when you do this, now you've got a greater cost of trying to nail and jail the cigarette smugglers. And what happens when you do that? Well, you get our friend here, Tony Soprano's happy because the mob loves to smuggle cigarettes. This is the best thing that could possibly happen. Now, you're going to have a special task force trying to track down smugglers. Then you're going to have to arrest them. You're going to have to try them. You're going to have to put them in prison. It just never ends. So I wrote here that the added tax won't even cover the cost of trying to nail and jail smugglers. Brilliant. It's a new kind of stupid. It really is, to think that that's going to solve the problem of people smoking. Just another thing I noted, I get all the time people defending the analysts are always saying game over, dollar collapse, dollar's on its last legs. It happens this year. No, next year, the year after, the year after. This story has been out there. I get it. I understand. The dollar is a flawed currency and we have too much debt and unfunded liabilities. I understand all that. And I know gold. Anyone would tell you who's paying attention that gold is better than the dollar or any currency because it has no counterparty risk. It's limited in its supply and its useful properties. I'm not saying that I am a fan of the fiat currency system, but I'm also realistic. Here's Ron Paul from 1982. Today we have a permanent financial crisis at home and throughout the world because men and women no longer trust the American dollar. Well, they're still using it, and they're still using it 30 some odd years later. No longer a just and honest measure of the value of work, the dollar has ceased to be the stable standard of economic worth the world over. Well, then what is? You could say gold. Fine. However, it's not, because honest men and women the world over, there are not millions and millions and millions and tens of millions of them who use gold. They use the dollar. So it's not a defense of the dollar. It's a fact. When you hear people saying the dollar's days are numbered, of course they are. Everything's days are numbered. But when you say it for 40 years, think about it. Under the Bretton Woods standard lasted, where the United States dollar was backed by gold, didn't last as long as the current fiat standard. That tells you something, that central banks love fiat currency. So even if the whole system collapses, they're not going to replace it with gold. Why would they? That would just restrain them once again. You could say, well, people are going to want confidence of gold. No, they don't. People don't even know what gold is. You told people, you've seen the Mark Dice videos. He's out there trying to hawk silver bars and gold bars for like a tenth of their price, or to give them away instead of a chocolate bar. That doesn't build confidence. You might as well back the currency with chocolate, according to the people on the street that Mark Dice talks to. So the idea that somehow gold is going to return and regain its rightful place in the international financial system, maybe not. People don't know what it is. It's not going to gain confidence. They're going to say, what do we want with that? Anyway, I hear this all the time, and the only people that say this are people who are paying attention, people who follow the Fed, people who follow gold, people who have an economic background. But that's very few. All right, let's look at this JP Morgan chart. This is astounding. There's your JP Morgan chart. 103,000. But let's look at the registered shares. They're still pretty high. When people say COMEX is going to collapse, it's going to default, there's no silver there. Sure there is. There's enough silver there. There's 30 some odd million ounces of silver to be delivered if somebody so wanted. Remember, people don't go to COMEX to buy silver. Game over if someone stands for delivery. They're not going to. They're not there to stand for delivery. If somebody wants gold or silver, they go to a broker and they arrange for it and they buy it and they get it shipped. Why would you take the risk on a contract that may not get delivery? It doesn't make any sense. And also, if you say, well, they're going to do it because they want to collapse the COMEX. Yeah, if you want to collapse the COMEX, COMEX is going to toss you off the platform. They're not going to let you, and there's position limits. So the whole COMEX default thing is another one of these memes designed to make you think that the guy who's telling you this is really got it figured out and this is going to happen. It's not. All right, what else do we got here? There's your silver. All over silver. There's 194 million ounces, including the 103 million ounces that JP Morgan has in the COMEX warehouse. So you take this 193 million and you add it to the ETF, 565, 600 million, whatever it is, ounces. You got a year's worth of silver supply in these two warehouses. Nice confiscation targets if you ever need it. As I mentioned, gold ETF demand, see, that's going up too. So it's not like investors don't want gold. It seems though they don't want the gold coin that you hold in your hand issued by the U.S. Mint. They seem to be satisfied with either open interest on the COMEX contracts or piling into these gold ETFs. Now let's talk about Modi, India. So he launched these 75 cashless townships across 12 states. There wasn't much detail. One of the things he said, the initiative was launched by the National Institute for Transforming India, very progressive sounding organization, with the help of the mobile wallet, a Mumbai-based financial technology company. So here you go. You have these progressive ideas, these progressive organizations teaming up with corporations. It's like Tesla. You get the government to back some grand plan, and the people who win are the people who create the plan and support the plan. So I'm sure the mobile wallet company in Mumbai is going to make a fortune forcing people to be cashless. And again, this is where the government, it shows you, it's their money, they own it, they tell you what it's worth, they tell you how to use it. They can recall like they did with the notes and say those notes are no good. They can do the same in your bank account. They can say, you know what, Indian rupee needs to be devalued, so everything in your on your card or in your whatever digital form it is now worth less. And that's why, you know, it highlights that maybe you don't want a gold standard, because a gold standard means then the governments are in charge of gold. They tell you what the price is. By definition, they have to fix the price. So now you don't have an outlet to trade something because gold price is now fixed. So perhaps it's okay for governments to have legal tender, but when they control it to the point where they control everything, where they control whether it's a gold-backed currency or any type of currency, and they tell you what you can and cannot use, you don't own your money. You're renting it, or you're owning it subject to their potential whim. As I mentioned, gold imports January to March were the most since the same quarter of 2013. Again, gold demand soaring. There's a Krugerrand coming out in silver, but you think, well, that's a nice coin, nice one to add. You know, maybe you've got American Silver Eagles, Canadian Maple Leafs, Chinese pandas, Australian kangaroos, whatever. Well, now there's a silver Krugerrand, 1 ounce coin. Should be highly recognizable. Yeah, but it's $57 when the other coins are in the low 20s. So I don't know who's going to buy that coin. I wrote a note to the South African Mint asking for some more details on how many they're going to make. I didn't hear back from them, so I don't know, $57 for a 1 ounce coin. I don't know what the collectability of that thing is going to be, but there it is. This we covered, this Chinese credit creation. It's just part of my point that China is notwithstanding the fact that they, like gold, a sound money place, they are creating more and more credit. They are not a sound money place by any means. They're a centrally planned economy, and if they need to create money or currency, whatever you want to call it, they will to meet their political goals. U.S. household debt near record levels. Now, I'm not going to go through these. With Smaulgld was active. We had last week, we had a number of YouTubes and blog posts. You can check them out on the YouTube channel or on the website. Now, here's the point. China sees higher risk of mass unemployment, pledges more fiscal and monetary stimulus. Yeah, So when they see a problem, they're going to get involved. That's not sound money. They don't want a gold standard restraining them. If they want a fiscal and monetary stimulus, basically means fiscal is that the, the, the Congress, so to speak, will allocate funds, and monetary means the monetary central bank will print money. So when China sees higher risk of mass unemployment, they don't let the free market do its thing. They're going to intervene. Gold. Russia's largest bank to facilitate. Yeah, we talked about this too. The direct gold trade between China and Russia, but now Russia is also talking about direct gold trade between Russia and India. This is a big deal. I like the concept that nations can trade what they wish, set up gold payment standards. It's just like for individuals. It's okay to be digital. It's okay to be cashless, but not if that's all you can be. It's the same with the dollar. It's good if a lot of people want to use the dollar, but it's not good if you're forced to use the dollar. So if countries want to trade between each other with gold, that's good. They want to trade between rubles or whatever. So it looks like this gold trade thing is going to, I don't know if it's going to take off, but they're going to definitely use it. And we'll see what percentage of transactions are actually going to have the gold trade. Economic data was so-so during although the housing market looks like it's picking up in terms of housing permits, but the housing starts were down. So it's always this fits and stalls in the housing market. Yeah, the prices have gone up, but the sales have not, especially with new home sales. Here's your Shanghai Gold Exchange. They were up big in March. I covered that. You could check that out. Russia had a huge pile of gold to reserves. You can check that out. Initial claims, nothing here. Fed's still talking a game about, 3 rate hikes this year. Still a good baseline, but, we don't necessarily have to do it, just like they do everything. They'll probably do one more this year. Like 2 years ago, I said they'd raise rates. I said they'd raise them once. They did. 2016, when they were saying 4 rates, and others were saying they won't do any rates, so they'll go negative. I said, no, they'll do one. They did one. This year, I said they'll do 2. They'll probably do 2. This is what the Fed does. They just want to stay in the game. They want to keep the dollar not too weak, not too strong. They want to make sure that the Fed, unlike other central banks, actually pays interest. That does help with treasury bond sales. If you're not going to use treasuries, if you're not going to use the dollar in your trading with other countries, you still may want to keep treasuries as reserves because they pay interest, and you really can't accumulate that much gold as reserves because there just isn't that much. And if you were to go out and try to grab more than your domestic production like Russia and China do, if you were to try to go out and grab tremendous amounts more, you just push the price up. So it is a good fallback to hold U.S. treasuries. They're relatively cheap and they pay interest, and you can use those as part of your reserve system. Rising rupee, an opportunity for gold buyers. Remember, the problem with gold imports at the end of last year was people didn't have any money, they didn't have any cash, it was taken from them, and the rupee was going down as a result. Well, now the rupee's going up, Indians have cash, gold sales seem to be going up. Here's a story, you might want to check it out. Who stashed gold inside a British piano? It's a mystery. Nice pictures at that link. There's your U.S. silver coins, pre-1965, and there's your America the Beautiful coins. It looks like this effigy mound coin is only going to sell 20,300, which would make it the second lowest mintage ever. And Frederick Douglass isn't doing too well himself. He's only sold 16,200. I don't know if that's it. No, we got some more. Yeah, Fisher, same thing. We're going to do 3 rate hikes maybe this year. We're not tied to it. Manufacturing down, services PMI down. So again, the economic data is so-so, not really taking off. There's your coins again, I think. Let's see if we got anything else left for the week. I think that's it for the stories, unless we got, nope. So if you did enjoy this report, please consider sharing it, buying your precious metals through the Smaulgld affiliates. By the way, if you buy your gold or silver at the links below, through the links below, you pay no more, no less than if you visited those sites directly. If you buy them on the links or the banners on the Smaulgld site, same thing. Smaulgld gets a small commission though, so it's not investment advice, but if you are going to buy gold or silver, please consider doing it through the Smaulgld site. Thank you very much.